gentlemen, please welcome Gavin Holmes.
Thank you. Thanks, Ricardo. Can you all hear me okay? Good, good, good. All right. Yes. So, the lost art of professional chart reading revealed using volume and price. So, I'm not going to be here talking about all the technicals and all the fundamentals. I'm going to teach you today how to read a price chart in 1 hour. Now, 1 hour is not long, but next week, I'm going to invite every one of you to a live trading session where I trade my live ActivTrades account on Thursday, so you can prove to yourselves that what I'm showing you in hindsight is there in foresight. I guarantee it. Yes, that's why I have gel in my hair now. That was my mullet. I was an 18-year-old police officer. I served with the Metropolitan Police. I served with Hampshire Constabulary. And I now have a TV show called Detective Holmes Follows the Smart Money, which you'll be seeing on Bloomberg at some point. And I'm teaching people to trade. But I'm teaching something called volume spread analysis, which is what I'm going to show you today. I'm the author of 2 books. How I ever got to write a book in the first place still staggers me. I'm 52 years old. It took me 7 years. The book's now been out 9 years. It's translated into 10 different languages and sold millions of copies. But the thing about the book is I talk about something called market manipulation. Now, isn't that a conspiracy theory? Well, I'll prove you today it's not. And I'm going to show you today why the news that you see on your TV on the Financial Times will make wrong decisions. And I'll prove it. And I'll prove it because I always imagine when I'm up here that I'm in the dock, not because I've committed a crime. I'm the officer giving you, the jury, the truth, the evidence. So that was my book, and it's called Trading in the Shadow of the Smart Money. And why did I write it? Because the man that taught me, the late Tom Williams, who was a former syndicate trader, he passed away, unfortunately, in 2016. He said, Gav, he gave me all his knowledge. He said, but if you want to get out there and help others, which is my mission, you've got to write a book. I said, what? I can't write a book. I haven't got time. He said, make time. That is your calling card. And you're going to get a copy of that book for free. You can go to our website to get it. I'll show you. We've put up a link up there for all of you to get that book as a PDF. And before you read chapter 1, read chapter 9. Because it talks about the power of belief. And I'll tell you what, me standing up here comes from a belief I had years ago. Now I travel the world. I do seminars in all different countries. I work with the Chicago Mercantile Exchange as an educator. And that up there, if you can see my pointer, that was the late Tom Williams. God bless him. He taught me everything he knew. He traded with a syndicate in Beverly Hills, California for 20 years. He retired at 40, a multimillionaire. He invented what I'm about to show you. Quick question, hands up. How many of you here have heard of the Richard Wyckoff method of trading? Just put your hands up. Not surprising. Becoming more and more popular. We called this the lost art of chart reading because more and more people around the world are now through the internet connecting with this trading method. Now, please note, your mind is like a parachute. It's best used when you open it. So listen carefully to what I show you because I'm going to prove to you every single thing that I show you on a chart. Right, the smart money. Can anyone tell me who that is on the top left? Who? Correct. We all know who that is, right? Right, for a prize. Can anyone tell me who that is? Australian. Yes, correct. Do you know his name? Well done. You're the first person in the seminar who's ever got that. Right, it's Greg Kofi, actually. And he worked for More Capital, and he made hundreds of millions of dollars. He's just like me, a human being, just like you. But he understands how to read the charts. He understands how the markets truly move. And then, of course, you've got the institutional banks, and that's who I follow. I follow the big players, and they leave elephant footprints, I can assure you. So, what I'm going to teach you here is how to trade in harmony with the big players. In Poland, I did a big event out there. They call them grubasz, big fish. Because when these big institutions start to move price, which they do, they did it in cryptocurrency last week, they dropped the price 1,000 in 1 hour. You can see it all on the chart. So, I'm going to talk to you today about, apparently, I don't agree with this, but the Business Insider said, the secret trading strategy from the 1930s that hedge funders don't want you to know about. Why wouldn't they want you to know about it? Because there's something that you won't realise when you understand volume. The self-regulated exchanges around the world don't release the true volume till the next day. Why? Because it's very important, as you'll see. And here it says, even in 2013, when that was written, hedge fund managers still swear by it. He said in his 1931 book, The Richard Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science and technique. It's out of print, somewhat difficult to find these days. It's not impossible, because I have a copy. But even in 2013, hedge fund managers still swear by it. And they're the smart money. And many smart money traders use the method I'm showing you today. So if you're going to play the game on Wall Street, you've got to understand it. So what I might say to you today might appear controversial. I don't care. It's the truth. And you can prove it to yourself, because everything I'm going to show you, you can go and check. And then you can read my book, and then you can come to the live trading event next week. And by that time, you will know probably what less than 0.1% of the retail traders know. Because this is not taught. Funnily enough, the one place it is taught right now is the Golden Gate University in San Francisco. It's called the Wyckoff course. So wherever there's money to be made in this world, you're going to have professionals and specialists. With lawyers, you're going to have criminal lawyers, commercial lawyers, doctors, brain surgeons, banking, commercial banking, retail banking, they're specialists. I can assure you, in the financial markets where there's a lot of money to be made, you're going to have specialists. Can anyone tell me who that is? Who? Gordon Gekko, Michael Douglas. Who's seen Wall Street? Put your hands up if you've seen Wall Street. A lot of truth in that movie. And Wall Street too as well. Some people said, oh, that can't happen. There's regulators. They'd never be able to manipulate that. I'm afraid it's exactly. So in his 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science, and this is what this is about, science and technique, Wyckoff explains composite operator. In his 2013 hedge fund book, hedge fund managers still swear by this book. One of the key, this is important, one of the key takeaways from the book is that if you want to succeed, you have to learn to recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators, and that's what you'll be doing next week when you look at your charts. You'll be looking for something called Yao Ming bars, and I'll come to that later. So what do we want to do? It's so logical, the markets, they're not difficult. We buy on the lows when we see an indicator, and we sell when it goes up. But you know, most traders who are retail don't do that. As the market's going up, a stochastic says buy, the moving average says buy, so they buy. And then the market goes straight down against them, and they go, hold on a second, that can't be. Everyone on telly said gold was going to go up. And they get killed. I'm going to show you how to prevent that. So, what do the public think? It's not how many retail traders and investors think, even though they think they do know what they're doing. When the news is bad and getting worse, and prices is falling rapidly, they panic and sell, fearing further losses. However, I will show you that's exactly the time to buy. When your gut instinct says, I've got to get out and sell, you should be buying. And at the top, when everyone on the TV is saying, oh, this is a great stock to buy, be very careful, because it probably isn't. So the professional money, they leave big signals or footprints on your chart. If an elephant walks across your garden, assuming you've got a garden, it's going to leave a nice big footprint. I'm pleased to tell you that smart money cannot hide their trading activities in volume if you can read it, as I will prove to you. So let me introduce you to the Wyckoff method and volume spread analysis, which I am a specialist in. I've been doing this for 20 years. I moved to Chicago 12 years, been in Chicago 12 years, and we moved back with my wife, Laura, who's here. We've been back, we now live in Leamington, in the New Forest National Park, where we've lived for 6 years. I have 2 lovely children who go to a nice school there. And if it wasn't for this, I would never have met Laura or had my kids. So I believe in fate, as you'll read in chapter 9. There's no accidents. You create your luck, especially in trading. The power of the mind is mostly misunderstood. My 3rd book is about exactly that subject. This is your holy grail. There is no holy grail. Everyone's looking for the holy grail of trading. It's there, it's in there, if you learn it. So on the left, my master, Tom Williams. On the right, Richard Wyckoff from the 1920s, who invented this method that this gentleman, Tom, computerized. So we have a software program that plugs into ActivTrades platform, MT5 and MT4, which gives setups, actual setups to show you when the market is moving forward, i.e. going up, or being distributed, going down. So Richard Wyckoff was born in 1873, passed in 1934. He was a stock market authority founder and one-time editor of the magazine of Wall Street, founded it in 1907, had 250,000 subscribers. And he didn't have the internet, so that's pretty good. He was the editor of Stock Market Technique, which is a very famous magazine. He said thousands of those who operate in the markets now recognize the fact that the market momentarily indicates its own immediate future, and that these indications are accurately recorded in the market transactions, second by second. And therefore, those who can interpret what transactions take place, second by second or moment by moment, and this is the bit, have a distinct advantage over the general trading public. Richard D. Wyckoff, 1914. And that is as true today, in 2019, as it was then, because the markets haven't changed. The markets move on forces. What we're charting is not technical, it's not mathematical, it's supply and demand. There are other forces at work which we'll come to later. That's what this whole mechanism, this whole system looks for. And then Tom, born January the 4th, 1929, passed away 2016. He was a former professional syndicate trader and he invented this system. And I spent 20 very lucky years of my life with him. I was with him when he passed as well. But he gave me that knowledge. And he said to me, Gav, there's one thing you've got to promise me. Don't keep this a secret. It's very valuable. He said, Gavin, I know something. He's 87. He said, if you give out the knowledge and you help others, it comes back 10 times. And I can tell you it does. There is a law of karma. It works. And I will always do this. Even though I myself am managing a fund, I will continue to go on the speaking circuit. And I now have this TV show as well. And you can go to our website, tradeguider.com. You'll see that on there. So what actually is volume spread analysis? Let's get down to some basics before we get to some charts, because I'm going to be talking about what's going to happen with gold. 2 weeks ago, on the TV show, you'll see it, I forecast a collapse in gold to 1275. It was on television. I also took a live trade on TV as well. Now, when I saw that signal in gold, I've seen it again on Friday. So you need to be in the webinar next Thursday, because that's when the market's going to move. It may move sooner. We could have a move on Tuesday. So most traders are aware of the two widely known approaches used to analyze a market, fundamentals and technicals. Many different methods can be used in each approach, but generally speaking, fundamental analysis is concerned with the question of why something in the market will happen, and technical analysis attempts to answer the question of when something will happen. Volume spread analysis, however, is a third approach to analyzing a market. It combines the best of both fundamental and technical analysis into a singular approach that answers both the questions of why and when simultaneously. At its core, volume spread analysis, or we refer to it as VSA, is a methodology based on the original works and teachings of Richard D. Wyckoff, a trader in the 1900s. The methodology seeks to establish, this is the important bit, the cause, because cause and effect is a law, of price movement on a chart. The cause is simply the imbalance of supply and demand as the market trades, resulting in strength, which means we can buy, or weakness, which means we can sell. For the correct analysis of volume, you need to understand that the recorded volume contains only half the knowledge required for a correct analysis. The other half of the knowledge is found when observing the spread or the range of the price bar, which I'm going to explain to you, don't worry. And the closing price on that bar, we don't use the open. Nothing's happened on the open. We only use the close in this system. Volume indicates the amount of activity. I repeat, this is important, this bit. Volume represents the amount of activity from the smart money on the price bar. And the spread or range of the bar shows what the price actually did. And most important, where the price finally closed. So, volume in all good charting packages Always available. Available with ActivTrades, available with their MT4, MT5 platform. I use ActivTrades MT5. Just so you know what I trade stocks, I trade futures on the CME, and I also trade commodities, and I'm a specialist in gold. That's what I mainly trade. I'm working closely with the Gibraltar Stock Exchange right now, who are the first exchange to actually, they're registered now as an exchange for coins, for cryptocurrency, the first regulated country in the world to do it. And I want to congratulate my good friend Nick Cowan from the exchange, who we're partnered with now, for achieving that. Nick's a customer of ours, he's a great friend, and most importantly, he's a great trader. So, volume. When I refer to the spread, I'm talking about not the bid-ask spread. I'm talking about the high and the low. You could, in America, where I lived, in Chicago, they would call it the range. Gavin, that's not a spread, that's a range. It's a spread, right? Volume spread. I mean, we nearly had to change the name of the software in America to volume range analysis, because they keep thinking spread is bid-ask. It's not. It's the high and the low of the bar in any time frame. By the way, this system works for scalping the market in Forex, futures and stocks. It works for swing trading, and it works for investment trading, because supply and demand is apparent and chartable in all time frames. In all time frames. Now, if I tell you I'm using a 100-tick chart to trade Forex, 100 ticks? Yep, it works. I'll prove it. Again, everything I'm going to tell you, I'll prove it. So how can volume spread analysis identify the moves of these big players? Well, volume, I repeat, is activity. I've got a sticky note on my desk that I look at all the time, and it says volume's activity. Now, when I went to Chicago, and I first got there, I was working in a very big office, and lots of traders, about 50 traders. I'll tell you a little quick story that'll make you laugh. So I got to this office. When I used to walk in the door in the mornings, I used to live right downtown in the center of Chicago. I'd walk in there, and they'd go, "Hey, Gavin, what's going on? What's going on?" That was the same. What's going on? I said, "Well, nothing's going on. Nothing, nothing at all. I'm absolutely fine, thank you." So, but then I thought, when I see a footprint on a chart, what's going on? So one morning, after about 3 weeks, I was in my bedroom, and I saw these two jet fighters go over the Sears Tower. I looked up, and off they go. Oh my goodness me, something's terrible here. So I got on the phone to my friend Jim Mooney, who works in Chicago, who's our partner out there. And I said, Jim, what's going on? He said, get in the office, evacuate, come here, get your computer. I'm like, oh my goodness, so I got all my stuff on. I'm running down Wells Street, and you hear, and everyone, I'm looking at them, going, what are you doing? And they're just walking along, and I get into the office, go up to the 20th floor, absolutely drenched, open the door, run in, everyone's just sitting there like this. I'm walking to my computer, I said, what's going on? And Jim and the guys come out of the office and said, oh, you didn't tell it's the air and water show this weekend, they're practicing. Completely happy. And that's the sort of people they're like. So volume, we're interested in it because it's the consensus of opinion amongst the smart money. The spread and the close confirm with what's happened in the background, what's about to happen in the foreground, as I'll show you. So, my job is to protect you from falling into a trap. That's my mission. My mission is to make sure that you're making educated decisions, not based on conjecture, not based on rumour, not necessarily based on analysts' reports. As you'll see, they can often mislead you. So, how is news? I love this picture, by the way. It's not my pet cat, but I wish it was. Doesn't look very happy. But news is used. And Donald Trump was the first president to ever discuss fake news. Now, whether you like Trump or not, he's been very good for the stock market. And he's been very, very good for volatility because he's totally unpredictable. So now, my wife doesn't like Donald Trump, and she's here today. So don't go and say, oh, you're voting Trump, because you'll probably get snagged. So good news and bad news is used. Now let's look at an example of how buying happens on negative news. This is just one example. I'm going to give you some more next week. News is bad. World stock markets in turmoil. And what happens to price? It falls. Okay, and you get pictures coming in, right? This has happened here. It was back in 2011. Now, 2011 was the start of an accumulation phase. It's a place to buy. No one told you that then, did they? But we had a signal that did do that on the monthly chart. This is a trade guider end of day software chart, which we have plugged into, this same system is plugged into ActivTrades platform, which is why I'm here. And I've worked, by the way, with ActivTrades, probably now for 3 or 4 years. I've done a roadshow with them, and they're a super company, I will say that. And I will thank them for inviting me here today. I'm sure we'll be doing more work with them. But one of the things I liked about ActivTrades, Ricardo is actually the guy that looks after me. If you pick up the phone, you're going to get someone. So if you're in trouble, they're there for you. So let's look at the volume. Now, this is the bottom of the screen, as we can see. All right, so we've got here the credit crisis. This is where it all started. But we've got a series of green indicators under here, which are our strongest indicators. And that was the bottom, by the way. But you wouldn't have known that because you'd have been told it's going to tank. But the volume told me on the down moves that that's buying. It's buying. It has to be, because at the bottom, the bar here is massive volume, as you can see. There's the big volume. But the next day we go up. That can't happen. If that was all selling in that volume, the next bar could not go up. It's possible. That is demand overcoming supply. Now let's look at how the news is used. This is quite amusing. Now you're going to go, hold on a second, but on that day I sold. I'm sorry, I do hear people at seminars going, oh my goodness. That's the credit crisis. It goes up, doesn't go down. Hold on a minute. We've got the downgrade by the Greece crisis. Look at the volume here. They piled in. Big institutions. Thanks very much, guys. We'll take it. There's nothing wrong with Apple's stock. There's nothing wrong with Netflix. What has the US downgrade by S&P got to do with anything? And it got upgraded again a year later. Rubbish. The fiscal cliff. Fears the Federal Reserve will start taking... You're getting the message. Look at the volumes that come in. Okay? As the volume... See, look, even the smart money is shaking it around. You see this? All the news. You see? And that's what happens. I'm going to show you how news is used deliberately. Ebola. That's going to kill the stock market, that is. It's in Africa, it's Ebola. It's a fear factor. That's the word they use. Fear. Fear and greed drives everything. Humans, emotional. Fear and greed. What do you think happened to the price of stock here? Do you think it went up or down after this? You know it going up. So here, fear has returned to Wall Street this fall, and at least some of the heightened nervousness can be pinned on Ebola. Brilliant, that's the analyst telling us. There's the signal on the same day. Big green indicator, up it went. Look at the volume. Look at the narrow spread. Next day we closed higher. You buy when everyone else sells. When you leave here, you'll no longer be a herd member, because my mission is to make sure you don't do that. You look for the signal, and guess what? In MT5 and MT4, it sends you an email and tells you on any time frame you're monitoring when these indicators appear. So you don't even have to worry about it. If the footprint appears, you get an email. And if you come and see me afterwards, I've got my phone with me, I'll show you exactly what they look like, because I had some on Friday. So that is what we refer to as a shakeout. And every indicator, there's 317 in the software approximately, has a number. Has a number. Shakeout. And how do we know that that has to be more buying? There's two simple reasons. We close near the top of the bar. If it was all selling, we'd close on the low. Totally logical. The next bar reverses. It closes higher. Demand on bad news and Ebola. This is Ebola. Buying. Now, this may seem unusual to you. Hold on a second. I would never have bought there. That's exactly what they want you to think. And I'll show you they can sell to you at the top. Now, the system that we've developed has been vastly improved upon from this. And with us today is our Chief Technology Officer and a trader himself, Grigory Margolin. He's from Russia, but he now lives in Leamington, near me. You should go and talk to him, because he's developed a sniffer, as I'll call it, but there could be other words for it, that finds these trade setups in MT5. And then it sends the emails. And it's a very sophisticated system. I couldn't have done it. I came up with the idea. Grigory was originally a customer several years ago when we met, and fate brought us together, and now he's part of the team. So, I know a lot of questions get asked about this. Will this work with Forex and currencies? Because there's no volume. I'm going to come to that and prove it. I'm now going to talk about the two most important trade setups to look for, because what I want to give you today is actual things you could go away and look for, whether you've got our software or not. If you come to the event next Thursday, you'll see all this in action live. This is known as bag holding. Bag holding, and it's just down the bottom here. Now let me describe to you what happens on this signal. What do you all notice about the volume down here? Just shout out. What do you notice about the volume on that bar? Very high. It's ultra high. If it's in this salmon-coloured area in the software, it's called the volume histogram. It means that is a volume footprint. Now, the range of the bar compared to the range of the bars, the highs and the lows, gets very narrow because the buyers are coming in. They're buying. And the news here on this stock was terrible. The next day, we close higher and the stock takes off. If you can find that signal on a daily, weekly chart, which we can, you can identify what the professionals are doing. But I can assure you, on that day, the news will be horrible. I'll give you an example. In 2010, that signal appeared in BP, the oil stock. And it was the day after they said, we cannot cap the well. And I thought, that can't be right. And I rang Tom, software's wrong. He said, no, it's not, Gav, they're buying. Go and buy some shares in BP, which we did. BP, as you'll see, the chart, it doubled in value in 6 months after the spill. How could that be? Professional money knew there was nothing wrong with BP. I even heard that Colonel Gaddafi was going to take over BP. It's all rubbish. Fake news, as Donald Trump calls it. Sorry, darling, I know you don't like Donald Trump, but I've mentioned him a few times. He's going to kill me now. Here's another example, but this time it's in a trend. So again, look at the volume. It's absolutely enormous. It's on a down move, so they've marked the price down. Imagine how the markets work. Imagine I'm going to sell you my laser pen. I'm not going to, but let's imagine I am. And I know, and you know, that that's only worth £10. £10, right? So I say to you, who'll give me £20? Anyone here? Give me £20 for this? There's no demand. No one's interested. Who'll give me £10 for it? We don't. It's probably we could get that from the shop. All right, I'll give it to you for 50p. Suddenly you'll get demand, and that's what happens here. Demand for price is signalled by the massive volume, down move, closing on the top of the bar with the next bar up. And then this very often happens in VSA. They come back in and they test on very low volume where they bought, and they go, yeah, we like it, up we go. Now, this isn't complicated to learn. You can learn this system in 4 weeks if you put in the effort. Some people, I've got some customers here with me today, some friends of mine, and one of them from Leamington here, who just bought the software only a few months ago. So you can learn this. But, like everything in life, to be successful, you've got to put in the effort. This is Facebook, the stock. Have a look here at the volume. This was before the collapse, not after. These indicators happened 2 days before the gap. This is very common. And this works on 1 hour time frames. It's very effective on 1 hour time frames. It's sign of weakness 1, SOW. That's not a female pig, a sow. No, it's sign of weakness number 1. It's a potential buying climax. What's going on? There's good news about Facebook. Cambridge Analytics is not going to be a problem anymore. Up it goes. Professional money know there's some news coming out because they'll know well in advance of you. So for every buy order, they satisfy it with a sell order immediately. And what happens? We close in the middle. But then, the day before the collapse, they do it again. They mark it up, narrow spread, the same indicator appears. So here, we have a scanner that works in our what we call PRISM strategy, which I'm going to give you an opportunity to download that document. It's a trading plan. If you don't know how to trade, if you're new to this is a written plan that we use, and it's 20 pages long. And if you just read that, and you didn't even read my book, although I suggest you do read the book, because it's free, you'll have a plan. Most traders, how many of you here, by the way, have a written trading plan? Put your hand up if you've got an actual trading plan. Put it high so I can see, I just want to count. That's not very many. Let me tell you a very important piece of advice. Fail to plan, plan to fail. especially in this business, you'll get killed. You've got to have a strategy. We heard Luke talking earlier, quite correctly, about looking at the different scenarios. If you've got a written trading plan, you know exactly what scenario you're looking for. I will help you, or we will help you, Trade Guider, our company, with a trading plan because we've done it for you. We've already got it. You don't have to do it. So this is the scanner. Now what this does is Wyckoff. This scanner I use every Sunday before my trading week starts. It's using Metastock data, which is $25 a month. Sorry, $25 a month. I use the S&P, the FTSE 100, the Dow 30, and the Nasdaq 100. And what this is looking at is stocks that are acting either stronger or weaker than the parent index. So in a bull market like now, we'd be looking at stocks to buy. In a corrective move, you don't buy as they're going up, you buy them as they're going down. You don't buy something that's going up, you buy it as it's going down when the volume appears. And if the market turns bearish, we start shorting these stocks. And guess what came up the week before Facebook went? The second weakest stock in the index. Very clever pieces. This is all based, this software, on Richard Wyckoff. Wyckoff method is based around strength and weakness of the underlying components of the index. So in the FTSE 100, you've got 100 stocks, and it then looks for the strongest and weakest stocks. Now, we talked about this a minute ago. Does it work then, Gavin, for spot Forex and currencies? Yes, absolutely. How many of you here trade Forex? Put your hands right up so I can see. Okay, how many of you here trade stocks? Put your hands up. How many of you here trade metals? Gold, silver, palladium? Okay, good, good. So, how many of you here trade cryptocurrency? One person, okay. Crypto is brilliant with this stuff, brilliant. Because it's so manipulated. The crypto is now the most manipulated thing in the world, which is great because it's volatile. Right, let's look at an example. Now this goes on and on and on, but I'm using an example from my book, okay? So it was back in 2014. This was the top of the pound, right? And Mr. Carney says, right, well, pound's going up, I'm going to raise the interest rates. By the way, he never did. But he keep 2 or 3 times they come out the bank, say, we're going to raise interest rates. So pound reacts, and professional money know exactly what the group are going to do. They're going to buy. And then the Bank of England set to call time on era of record low interest rates. So everything you're hearing is, well, that's it. The pound's strong. I better get in. And there again. Talk of rates rise by Christmas, welcomed by some economists who say crisis-level borrowing costs are no longer justified. Brilliant news. And the pound goes up on that day. But look at the volume. And it drifts higher. So anyone that brought in here, there's nothing wrong with that. I wouldn't have been short on that signal. But you draw a line, which we call a trigger number, across the top of it. And we mark it and we wait. We don't do anything. A lot of traders made some money in here, and sometimes as it comes back down, they're still holding because they say, no, it's going to go to 1.8, 1.9, and I'm confident of that. But I already know that that's one of our strongest signals to tell me to get ready to sell. And over here, we go up to that line 3 weeks later, and there's no volume. There's no demand. There's no interest, and the pound collapses. That was the top, by the way, and it completely fell. And over here, in the ActivTrades platform, we have another one of our indicators, supply, or sellers coming into the market. Supply entering the market. And that means that sellers have appeared on the high volume. The next bar closed lower, and then our trending system, which is all developed by Grigory, which is this red thing here, and these red diamonds, all of those confirm the change in behavior. If you want to read a great book, there's a super book by a gentleman called Philip Friston. You want to write that name down. He's a 30-year veteran fund manager from the UK. He was one of Tom's best friends. And he's still, the last TV show I did, he was on that. Go and have a look at that. It's on YouTube. And Philip Friston, F-R-I-S-T-O-N, wrote My Journey of Discovery to Volume Spread Analysis. And it's a super book. It talks about how he lost money, and then suddenly found the truth, and then turned it into a fund. Now this proves that tick volume, which is what we're using in Forex, works. On the left over here, I have volume from the Chicago Mercantile Exchange. This is in our real-time software. And basically you can see at exactly the same moment the exchange traded volume, which is not tick volume, it's exchange traded, from the CME, the 6B contract, produces an indication, another one of our strong ones, called a trap, and the market collapses. On the right, we're using tick volume, just like MT5 and ActivTrades, MT4 and ActivTrades do. This happens to be from eSignal. It wouldn't make any difference. Exactly the same indicator at exactly the same time. Tick volume over here, CME volume here. It works. And it works very, very well. So, accumulation and distribution. When professional money are accumulating an instrument, they're buying it. When professional money are distributing an instrument, they're selling it. And that's a Wyckoff terminology which has been around for years. You need to learn that. Accumulation is buying, distribution is selling. Here is the actual chart of British Petroleum, BP. This is exactly what happened, the actual chart. So the share price comes out here and it says BP shares plunged, which they did. That was not untrue. BP shares plunged. And the news was correct. BP shares suffer biggest one-day fall. Group's market value down 44 billion since rig exploded. Group to fight oil spill with container cap. Do you think that's a time to buy or sell? Shout out, what do you think? Buy or sell? You're getting good, aren't you? But I tell you, if you didn't know that that signal was there on the monthly, but it was, and it was there on the weekly, and on the daily, guess what we had? Bag holding. The stock, from the moment they said, the day after they said we can't cap the well, it doubled in value. That is a fact. Go and check it. Okay, it's a fact. So when you see this type of thing going on, the news will always be bad. But you don't buy on every bit of bad news. You wait for the VSA principle to appear, and that's what we will teach you. We will teach you the 10 strongest and the 10 weakest principles. And I guarantee this. There's a disclaimer that was put up right at the beginning. This is a difficult business. On our website, you'll find an article written by a trader, in a magazine by a trader, Tim Raymond, his name was. He won the World Cup Forex Trading Championship twice. If you come and get my business card afterwards, my wife has them, I hope. Laura, can you stand up a minute so you can give them the cards quickly? Go on, make you famous. There he is, yes. See Laura, she's got my business cards with our website details on there. Go to the front page, put in your name and the email address, that's all we need. You will then get straight into it. You'll get a copy of the book and a video that we've produced with a guy called Dr. Gary Dayton. And from that, well, you'll get an invite to next week's live trading event. If you're not registered there, you won't get it. So this was the Gulf of Mexico oil disaster, and we double in value. Now this signal here on the monthly chart is called a shakeout. And what is a shakeout doing? It's doing exactly what, and these terminologies, by the way, make sense. If I've got a pocket full of change, and I've got pound coins in it, and you want to get at them, you only have to grab hold of my feet, turn me upside down and shake me. And all those coins are going to pop out, aren't they? Shakeout. It's a very powerful signal. How do we know that that's all buying in that volume? It's so logical. The next month closed higher. One of our customers who's going to be working with us is here is Aram. Aram, do you want to stand up for me? He's going to be doing a live trading room, hopefully, with us. If you want to talk to someone, you're a doctor, right? How long have you been doing this?
2 years.
Yeah, so, and how long have you been doing the VSA stuff?
Just over a year.
Just over a year. Okay, now there's a gentleman who had no prior experience whatsoever. Okay, now pretty much doing this full time. And doing extremely well, by the way, congratulations. You know, because he put the effort in. Go and talk to Aram afterwards. He'll tell you how he did it. And it isn't that difficult. Because Warren Buffett said, to be successful in trading, you don't need to have a big IQ. I think mine's about 10. But whatever, you don't need it. What gets traders and investors into trouble is themselves, their human emotions. When Tom was teaching me, he said, Gavin, if I had my way, and I was teaching a student, I'd put them in a dark box with a screen or two screens, no news, no interference, no analysts telling them anything, and just look at the chart. Right, Aaron? That's the way to do it. Don't look at news, don't look at charts, or look at the charts, sorry, don't look at the news, don't look at the reports, because as you'll see, the reports will definitely mislead you, because the market has to have losers. It has to. It's like a pyramid scheme. It has to have losers to function. So there are two types of traders. There's the wolves and the sheep. And my job is to put you over to the wolves, because they're the ones that make the money. Simple as that. So let's look at this. Goldman Sachs raises gold price forecasts. Goldman Sachs. They're telling everybody, we're raising that price. It's going to be brilliant. Do you know, I knew something was wrong because I went to Berlin Airport and I went to buy a can of Pepsi. And there was a sandwich machine, there was a Coke machine, there was a candy machine, sweets machine, sorry, that's American, candy sweets machine. And then there was a gold bullion machine selling little gold bullions. Something's terribly wrong here. If there is a world crisis and gold's a safe haven, what are you going to do? Eat it? No. Drink it? I tell you what you could do. You're starving, but you could look at it, because that's all there is. Gold isn't a safe haven. Go and look at my YouTube video that I did in late 2011. I got absolutely slated for this. I was at the CME at the time, Chicago Mercantile Exchange, and I saw a signal, which I'm going to show you. And I did a video. It's had thousands and thousands of views now. And everyone was telling everyone, even on the TV, they were coming up and saying, everyone's buying gold. And after this report came out, gold went up. That's the good news. Shall I tell you the bad news? It went up on massive volume. That's bad. And it closed and gave a signal, buying climax, and on the monthly chart, or the weekly chart, hidden selling. Our software detects it. That's what it does. So, thank you very much, Mr. Sachs, Mr. Goldman Sachs. You've told us it's great. Goldman Sachs raised its gold forecast, citing the fall in US real rates and intensifying sovereign debt issues in both the UK states and Europe. We expect, remember these are the analysts, we expect prices to climb in 2011 and 2012, given the current low level of US and interest rates, the Wall Street Bank said in a note to clients on Monday, which is a note to the clients, it's a note to the whole world. That's what happened. That is a hidden selling, one of the strongest signs of weakness, and it always happens on good news. And if it happens on a weekly or a daily chart, your luck's in. And they happen every day in Forex, you get this. Especially around news announcements. Don't trade into the news, trade out of the news. It's professional money, move when the news is out, but they move the market in the complete opposite direction that you're thinking of going, promise you. That's why you'll struggle. That is hidden selling. The date is exactly the same month as they came out with their report. Everyone's gone long gold, backside's handed to you on a plate. The next signal there is what we call a reversal, and that's what happened. Anyone heard of Richard Ney, the famous actor who turned investor? Put your hands up if anyone heard of Richard Ney. Oh, there you go, it's come at the back. He was an actor in Beverly Hills, and he turned into a stock investor. And he began to invest his money in stocks, and it just kept losing money every week. He couldn't understand it. And then he said, something's wrong here. There must be some sort of manipulation going on, because I'm buying on all this great news, and then I'm losing all my money. And just when I sell it, it goes back up. And he wrote an article or a chapter in his book, and he quoted the famous gangster Lucky Luciano from the 60s. He was a gangster in Chicago and New York, and he was granted a tour of the New York Stock Exchange trading floor to meet the specialists. And when he came out, all the photographers were there, and they said, Mr. Luciano, what did you think of the trading floor? And this is exactly what he said, you can check. He said, well, a terrible thing has happened. I realized I joined the wrong mob. True story, you go and check it. So this is what happens. This is how it has to work. This is known as distribution after a climactic bar. Look at the volume. The public don't know this, by the way. You're a very few number of, I've been around the world teaching this, but you still see these people going on television. I'm going to show you a chart of Qantas to prove the point before we have our coffee. Okay, because I do know this is contrarian, and I make no apologies for it. I'm an ex-copper. I didn't believe any of this when I first met Tom. I thought he was mad. I thought this old man is trying to get me to invest in his company. We ended up buying the company. The company is now 42 years old. And Richard, my business partner, who's also, Richard, do you want to stand up? You can get a business card off him as well. He's our marketing director. And Gregory, can you stand up, please, as well? This is our chief technology officer. Yeah, he's very shy. Here he is. That's Gregory Margolin. He's a genius at VSA, an absolute genius, because he's put all this indicators into MT5, into MT4. And this distribution happens on bullish news. Now, I can see a few looking at it and going, I'm sort of getting this. Am I a member of the herd? Not anymore. Not when you leave here. When we go and have your coffee, you'll have information a lot of people don't have. Now, when I lived in Chicago, I used to like going to see the Bulls. Who's heard of the Chicago Bulls? Basketball, sorry. Yeah, you've heard of them. Amazing if you ever watch it. But there was a player who used to play, he's now retired, but when I did this slide, he was still playing, for the Houston Rockets, called Yao Ming. That's Yao Ming. He's 7'6". He's not small, and he was one of the best players in the NBA. Now, when I talk about looking for a Yao Ming volume bar, I'm talking about a price bar. Let me give you an example. Well, if Tom said, this is Tom talking here. He would have said this. He said, Gav, imagine you're walking down the street in Chicago, it's 5 a.m. in the morning, and an alien lands right next to you. I said, right. He said, just imagine. And it gets out of its spacecraft and it's got a questionnaire. And the first question on the top is, how tall are you, Gavin? I said, well, 6'2". Why? The alien says, well, 6'2", I don't understand. I've never seen, what do you mean? Oh, I need you to compare it to something. Okay. So my daughter, Olivia, is about this high, and Yao Ming is up there. So my daughter would be considered short. I'm pretty tall, but Yao Ming is massive. We're looking for him on the price chart as the first place to look for a trade, not to trade immediately, because we're going to want to look for confirmation, as you'll learn next week. Qantas nosedives on profit warning. Let me ask the audience, put your hands up if you think this is a place to buy or sell. Hands up, buy. Hands up, sell. Okay, see who's right, shall we? Qantas nosedives on profit warning, 2012. 90%, well, shares in Qantas dived to an all-time low, warned profits would slump by up to 90%, this was in 2012, due to deeper losses in its international operations. That's the day the news came out. We bought, we went long. And the bar was panic, but the signal was the shakeout followed by the reversal. This is the start of accumulation. But you'll never, ever want to be buying there, I can assure you. And in fact, that wasn't the place we bought. I'm going to show you now where you look. When a market does this, in that bar with the green indicators, there's 5 of them in a row telling us this volume is stopping volume. It's stopping the down move. But when that happens, especially on daily stocks, it can take 6 to 8 months before it breaks out. So what do? We draw a line across the top of that bar, and when our trending system, which is here, begins to turn green, when it breaks the top of that bar, we get long on the smaller time frame. So remember, the news is bad and potentially getting worse. But it's a buy signal. Now, when Tom rang me, and I was doing a seminar at MIT Boston about this BP chart that I showed you, I actually didn't believe it myself, despite the fact he'd been teaching me. So I totally appreciate if you're out there and you're still skeptical because you've been burned by buying software or people selling you different indicators, look at the underlying logic here, and it's simple. It is not complicated, which is the beauty of it. Most things that can make you successful are actually that complicated. So what happens here, it collapses, it accumulates, and we have a 2-bar reversal. It's logical. If that volume was all selling, the next day could not reverse. It can't happen. It's impossible. It breaks the law, the universal law of supply and demand. That is demand coming in on very bad news. And news that they're going bust, just like BP, they're going bust. You'll hear this all the time. When I hear they're going bust, I watch for the chart. One company that did come up with news we're going bust was HMV, you might remember that. And their stock price kept falling. And all I was doing was shorting. Why? I didn't get any green. They were selling it. Every time it went up, they just shorted it until it went bust. So you can make money on the downside. I make more money shorting Forex than I do long because it moves quicker because of the panic. Now, right at the barrier, down here where the higher volume was, now the volume's much lower and they're ready with these 3 indicators in this area, it's in the right place to buy. And as the diamonds turn green, on the 5th green diamond, as you'll read in the trading plan, you have permission to buy from the system. Permission, that's what it does. It says there is permission, if you choose to. Remember, you have to make the trading decision. This is a decision support system. And this is known, and if you read Philip Friston's book, and again, I do stress you get that, this one here, this is accumulation. He describes this in one chapter. He describes all of this. Look at the volume as the down moves come in. If you don't think volume is important, I'm now going to prove to you that at the top it does exactly the opposite. Hold on a second, this is 3 years later. Qantas flying high, mate, after a record year. Brilliant. Do we think that's a time to buy or sell? If you think buy, put your hand up. Good news? Right, if you think sell, put your hand up. Oh, you're starting to get this. The end of a rising market, the day after that news story came out. We shorted. Why? Look at the volume. It's on an up move. Narrow spread, okay, and the very next bar, there's no demand. It's like for the pen. I don't know why this is so difficult for some people, but I know because you're programmed, you've probably been to hundreds of exhibitions or you've seen webinars, and no one shows you this. It's the truth. That's why I'm always staggered when people come to me and say, well, no one shows volume, Gavin. I said, well, I don't know why, don't ask me, it's logical. I can show you thousands of charts. Well, I won't show you thousands, I'll show you about 50 on Thursday, because there's 2 in the FTSE 100 right now. Well, I won't say anything. Come Thursday, you'll see it. No demand. It's like the pen. They've marked the price up, so the market maker here has kept the price up to try to encourage some more buyers, but there's no volume because they've sold in the background on this bar. Look, the highest volume. That signal, the end of a rising market signal, is the strongest indicator in the VSA system to short. And, again, I can show you on my phone what that looks like. When these indicators come in, I use a GMX email account, so I get about 60 to 70 alerts per day from all the major Forex pairs. I don't always trade the miners, though I do monitor them. So that's roughly what you get. And I probably trade 10 to 15 of them because I'm very selective about what I trade. No demand. After weakness, price collapses. Everyone who bought in here on that good news has gone, I'm now locked in. And Qantas continue to fall until they, what Wyckoff called, puke their stock out. They're going, I've had enough. I'm giving this business up. I've had enough. Every time I buy, I lose. Every time I sell, they buy. What's going on? Volume spread analysis tells you why and when they're doing it and how you can profit from it. How does it work then? How am I doing for time? Okay. I will take questions at the end because we've got about another 10 minutes. This is how the markets work. What happens is you get optimism, some news comes out, you get some excited, I'm long, I get, brilliant, gold's going to the moon. Hold on a second, last week it's gone down. That's just a blip. Oh, good, it's gone down again. I'm still long. No, can't be. I'm definitely right. Market's wrong. I'm definitely right. Then down here, they have another big drop, and now you're in fear, desperation, panic, and this is where the buying comes in. This is where I like to buy. When everyone else has puked out their stock or their Forex pair, I'm in here, and that's where I'm selling. End of a rising market, shakeout or bag holding. They will be there at that time, I guarantee it. So here's the key points to what we teach. And again, if you want the free copy of my book and the video that goes with it, it goes into a lot more detail. I've got an hour here. It's www.tradeguider, all one word.com. TradeGuider, that's what we do. But I've also got business cards, so has Laura. So just grab a card, and that's got my details on it, as well as Richard's, or if you've got any questions. We look at the big picture. That's the key to this. We're not just looking at the right edge going, oh yeah, I'll take that. No, we're going to tell you it's a jigsaw. The market is fractal. What happened in the past will repeat itself in the future, guaranteed. I study neuro-linguistic programming, NLP. Has anyone studied that? Anyone even know what it is? Put your hands up. Okay, I was taught by Tony Robbins. Some of you will know. Anyone know Tony Robbins? Right, okay. So what I realized from trading with these systems that Tom gave me, because I use NLP in my life and also my trading, because I have a strong belief system, I saw that these numbers that Tom had put on the signals had a sequence. And when the sequence happened, the market fell, or when the sequence happened, it went up. And then Grigory was smart enough to program those sequences in for us, and then we tested them. And they work, they have to work. Now, nevertheless, let me be clear. Sometimes in very choppy markets, you still have got to manage your risk. In the trading plan, I never put into a trade more than 2.5% of the capital that I'm trading on the account I'm trading. You'll see me trade very small account size on Thursday, although I trade much bigger account sizes, because I want to show you that you can turn a small account into a bigger account over a period of 6 months. That's what it will take you. So if you're trading with £1,000 and you want to turn that into £5,000, you've got to have a realistic, what they call compounding system. And you've got to have a very tight risk. And that's all in the document, by the way, so I'm not going to, you can get that from TradeGuider. So we look for the Yao Ming bars. That's bars with massive volume. We identify the trend, and this is the key to VSA as well. We look at the support and resistance levels. Just like Luke was teaching you there before with the lines, we do exactly the same thing. We're actually going to be working with Luke as well, closely. So you'll probably hear us in webinars at some point in the future. Look for a change in behavior. What does that mean? If it's going down and the volume comes in, it starts to go up, it's changed behavior. If it's going up and then it starts to roll over, because of the high volume here, it's changed behavior. If it changes behavior for the downside, we short. If it changes behavior to the upside, we look for longs. But we don't go long on an up move, we go long on a dip. And the indicators prove that. Look for accumulation and distribution. That's all in Philip's and my book as well. And that will define what the smart money are doing. And then we look for trigger numbers. And I haven't got time to talk to you about those. But on Thursday, I'm going to show you what they are. Very simply, if you've got a massive volume bar with a high and a low on it and a close, and you project those bars out and price action starts to get up there, you get a setup. All volume based. You will not, just be clear, you will not see me using MACD. You will not see me using stochastics. You will not see me using moving averages. You will not see me using candles, although thousands of our customers do. We've got thousands of it. We're in 40 countries all over the world. We've been around a long time. So is the Wyckoff method. But what you will see me identifying is support and resistance levels, pivot numbers, which are important. And I was one of the first people to trade live inside the Chicago Mercantile Exchange, in the building itself. Okay, now interestingly enough there, if you look at the floor traders, and my wife's brother, in fact, was a trader in the pits. When he saw this system, he said, Gavin, he said, you're looking at volume, you're looking at activity. That's what we look at. I said, it is. That's exactly what we're as close to the pit floor, and it's a dying breed, as you can get. And then we're looking for these trigger numbers, and again, I'll show you those on Friday. So this is basically how phase of markets work. Phase A distribution. Phase B, reaccumulation. Phase C, an attempt to rally. And phase D, what we call jumping the creek. The creek line here is an area which we call an accumulation zone. Can anyone tell me, the S&P 500, the NASDAQ, the FTSE, what phase do you think we're in? A, B, C, D, or E? Just shout out. E. Who said E? Well done. We're actually up here. We're right at the top of E. We've broken old highs. We're right up here. We're vulnerable, but I've got a signal that's just come in. I'll show you that on Thursday. I'm not going to have time to do it now. This is what it works. This is how smart money operate. At phase A, they stop the trend. So in a downtrend, they buy, bag holding. Phase B, they build a cause. They start to accumulate their positions at low prices. Phase C and D, they then test those levels to make sure there's no more supply or sellers. And then phase D, they define a new trend. And then on phase E, as you just correctly identified, phase E is what we call the markup and the bull phase. We are in, despite all the negative rubbish news out there, the greatest bull run we've seen. And everyone's depressed. But I'm not, because there's massive opportunity. There's more opportunity thanks to Mr. Trump. I'm sorry, I mentioned him again. Sorry, honey, but I'll take you out for dinner tonight. But he is causing a lot of volatility. And we're going to be discussing in the panel of experts this afternoon some very, very interesting stuff about that. Because I lived in Chicago, I've been speaking to all my friends out there, so I've got a lot of connections in the banks, on the floor of the exchange. So I've got a very good take on what's going on. I'm going to recommend a book to you as well, which I won't do it now, but we'll do it this afternoon. So, very simple. Accumulation, the establishment of an investment or speculative position by professional interests in anticipation of an advance in price. Markup, a sustained upward price movement, a markup. Distribution, the elimination of a long investment or speculative position, and a markdown, a sustained downward price movement. The basics. Wyckoff and VSA studied market action based on volume spread analysis, determining where risk and reward were optimal. I can't show you that today, but I'll show you it live on Thursday. Studied the psychology of trading and why smart money buy and sell at a certain time. The market is a psychological business. And if you've got a strong psyche and you understand what to look for, you can win in the markets. Explain shifts between the weak holders to the strong holders, commonly known as smart money. And introduce the term composite operator, or the consensus of opinion amongst the smart money. So, to finish, before I take questions, there are two market participants. That's where we want you. We don't want you in here. Because if you're here, you're going to be losing. And in Tom Williams' book, and in my book, I refer to the herd. Because unfortunately, that's how the markets operate. I know, right now, if you started smelling smoke from the kitchen and the fire alarm was going off, you wouldn't be sitting there listening to me. You'd be down those stairs, quite rightly so. So, that's where we want to put you, based on volume spread analysis. Right, just about on time. Any questions at all on any of this? Because you will have questions, but the best way to get them answered is I'm going to be around now, and I've got my cards. Just come and approach me. I'm an approachable guy, and I'll answer them. Anything that you think works, doesn't work. And let's go and have a coffee. God bless everyone. Take care. Thank you very much.